In this discussion between Tom Lee and Ed Elson, the primary focus is on Bitcoin, which Tom Lee views with long-term optimism despite its recent price drawdown. The sentiment for Bitcoin is ultimately positive, as Lee explains that the recent dip wasn't driven by a failure of the asset itself, but rather by a massive deleveraging event in the broader markets. He views Bitcoin as a legitimate alternative to gold and a hedge against fiscal instability, suggesting that once the forced selling and margin calls subside, the underlying structural demand remains strong. Lee also touches upon gold with a neutral to slightly positive sentiment. He treats it as the traditional benchmark for the store of value trade, noting that while it hasn't seen the same volatility as crypto, Bitcoin is increasingly capturing the mindshare of younger investors who previously would have looked to gold. Furthermore, there is a neutral sentiment regarding the broader S&P 500 and general equities. Lee notes that the deleveraging seen in Bitcoin was a shot across the bow for the wider market, indicating that systemic liquidity issues can drag down even the most solid assets temporarily. However, he doesn't signal a permanent bearish turn for stocks, instead focusing on how these market panics create entry points for those looking at the long-term fiscal trajectory of the United States. He concludes that as long as debt levels remain a concern, both Bitcoin and hard assets will continue to find favor among investors.